Great. Good afternoon, YouTube room. I'm only on for a half an hour going on what I'm seeing now. Let me tell you, I've been doing this a long time, long time since for 43 years. And I get pissed off just like anybody else does, missing trades. I just want you to know that. So, number one, I went to the doctor today. I begged everybody that they were going to throw money at everybody when I was gone. So what happened? Well, we bought good news and bad news. We bought GTBIF in here. We sold it here. Yeah, we had a good trade. Couple of hundred shares make 60 cents. Then it did this. I wasn't here. And then they voted to decriminalize marijuana, not legal, just lower the notch compared to some other drugs. And you see what happened. Now, the thing is, you're going to miss things as long as you trade. You're just going to miss things. That's just the way it is. But I was bearish on the SPX. Just fascinating to see that happen. If I'm not here, so let's say I'm going to the doctor and you see this kind of thing on the right. And on the left, you see a daily chart of it getting overbought at resistance. I'm telling you, just go buy a ton of puts. I mean, I just can't tell you how many times that works. So the thing is, your deal is to come out ahead every day, even if you miss some things. And that's just the way it is. We were also in this. This was a big bad voodoo daddy idea. See the bull flag? Well, we bought it here yesterday. We sold it here and we're patting ourselves on the back, making $100 on a $2 stock. It went down. We were patting ourselves on the back and then it exploded. And that's the first thing I want to show you, how to trade a momentum stock. So one of the hardest things for a trader, even with me that's done it forever, one of the hardest things to do is to go in and buy it when it breaks the rectangle, even though you already were out here and when it was already here. But I'll show you because it works a lot. But this is for momentum stocks, not like a stock that hardly moves. So let me show you a perfect example. I'm not in it, but we were in it. But the point is, it held support yesterday. And then look at the rectangle. This is a rectangle I've been showing for about 3 days. And I want to show you what we're talking about. We're talking about two different types of rectangles. Yeah, thanks for rubbing it in, Mitch. No, I'm joking with you. But you're right. But we were looking at this rectangle, right? Well, there are two of them. But basically, we were looking at this rectangle. And right there. So the problem is we got out here and it got back in it. So we gave up. Well, not gave up. I was gone. So, but the point is that then it broke this. And I want to show you when you play a momentum thing. And I know it looks tough, but it is there to do. So this news came out. So the news came out about the decriminalization stuff. And I just want to show you on how certain stocks move before other ones. See that on how it blew through that high from this week? This hadn't gone above it yet. So this was at 13 when this already had violated that. So don't be afraid to pay 13, even though it was just 12 and a half, and now it's 15. So I'm just telling you on these momentum stocks, it is there to do. Here, let me show you again. See that right there? Right in there. That was about 1305. This, it's about 1315. The point is you had a chance over resistance to buy it. So just to let you know, it'll be there again. We've seen this 8 million times. There's always something else to trade. VKTX, we made money in it in broken wing butterflies, but guess what? Yeah, we got out too early. That's just the name of trading. So, when it comes to that. Now, getting back to it, what do I think of the markets in here? Well, I did some copy and pasting for you, so you sort of know what we're talking about. and I wanted to show you. Now, I put these on the nightly charts when I do the nightly charts 2 or 3 times a week for the Chart Patterns Mastery subscribers. So, first thing, end of the October, early November, strong. You know that. That's right, when I did that short selling class. But great timing. I begged him not to do it then, but that's the way it is. What you're going to notice in here, this is every month, every day, and every average return. And I think the first thing you'll notice is how many are down in May. So a lot. So I know somebody that's pundit on Twitter. Actually, I've met him. Cocky pundit on Twitter talks about, oh, the last 9 out of 10 years, it's gone up in May. I'm going on that. But I don't really care about 9 or 10. Number one, this is 70 years. Number two, I care about the charts. But it doesn't hurt to know historically. And what I mean by that is a bearish chart in May is more likely to work than a bearish chart in October and November. Just all about percentages. The other thing, here's the performance in non-election years. So you see May is up a teeny bit, but look what it is in an election year. So just keep that in mind about net change down in an election year versus a non-election year. So just, keep that in the back of your mind. I think that's a big deal. Another big deal in here is the price performance in September and October in election years, especially October. That's pretty impressive. Down 0.74, up 0.82. That's pretty impressive. So all this means to me is that in May and later in summer, bearish patterns are more likely to work. That's all it means. So here are some of the earnings coming out. So you got the Amazon, the AMDs, the Super Micro, SMCI. Tomorrow morning, the Pfizer's, the CVS Health. And what we've been doing is not taking shots with earnings. What we've been doing is reacting after earnings. So I just want you to know that, reacting after the earnings are out. So let me show you what we're talking about. And the day of earnings or the day before earnings. So the first thing is, and this was a great example, Asset Chart Patterns Mastery. So if any of you are in Chart Patterns Mastery, mention on how we are lowballing SMCI on the opening. All we were doing in here is saying this was going to revert to the mean one time during the day. So what happened? It opened there, immediately rallied 20 points. I want to show you something really interesting, and this is a trader trick, but it's not really a trader trick. It's just the way we trade. You see what SMCI did. You see a 1-minute chart. So the theory is that if it's down, it comes back to be unchanged at least once. Well, when it was 908, we were talking about buying puts. Then I went to the doctor because it would go back to unchanged. Well, you're also combining that trend line. So just keep that in mind. Amazon, yeah, I'll go over in a minute, Mitch, because it's a good point. But I wanted to show you this because it's interesting. You see on how this twerk, it came down to test that. What's more interesting, if you lowball calls. Now, what do I mean by lowballing calls? What I mean is if the stock opens down 10 points and it has earnings tonight, you're looking to put in a bid on the options that are 10 points further out of the money than the options the night before. So what the heck am I talking about? I'm talking about like the 1,000 calls. So see the 1,000 calls right in this area. But the point was, and I'm going to take this off. So the 1,000 calls, the point is on the opening, these were $18. Next thing you know, they're 30. Now, when the stock did this and then back up, that second twerk, they didn't come close to 18. So the whole point in here, and if you want to try to value it, I'll show you how to value it. So this is what I'm seeing, that I like playing things before earnings if they open way down and the market overall is bullish, or way up if the overall market's bearish. We did it in Lamb Research on the downside, and we did it yesterday in Dr. Pepper on the downside. So let me show you what we're talking about. So here's SMCI last night. I just want to show you on how you throw in a bid. Now, what do I mean by throw in a bid? Well, this has wide spreads anyway, as you see. But on the opening, if it opens down 10, they widen them a lot. When I was a market maker for those 8 years, we'd widen them a lot. So even if we bought on the bid and it went down a little, we'd still make money because we made them so wide. So that's the first thing. The second thing is, let's say it's down 10 and you're betting on it going back to unchanged. So you don't have all the reasons, but if the markets are wide enough, it's worth a shot. So let me show you what we're talking about. We're going to go to the Analyze tab in SMCI for yesterday. So it's 890. That's where it closed. So what we're going to do is look. Now it looks like it's going to open down 10. So let's say you're looking at the 1,000 calls to buy. So Mitch, and everyone, I hope you like the idea of looking at this. But we try a lot to mess around with these kind of ideas. So the idea is it opened today. It was down 10. So it was down 10. So let's say you want to buy the 1,000 calls on the opening. Well, you got to look at where the ones 10 points farther out of the money are. 10 points farther out of the money, they're 25. How about 20 points out of the money? They're 23. So just keep this in mind because it's really interesting. So it opened down 10, but just keep that in mind, those 10, 20s. At one time, it was down 20. But look at this. They're 20 points farther away than the thousands. So theoretically, if that's down 20, these should open like 23. So you put in the hundreds at, let's say, 19. You want a big edge. Well, look where it opened. It opened down 10, and look where the puts, the 1,000 calls opened. They opened at 18. And not now, it's down 26, but they opened at 18. Even though it was only down 10. They made it bid 1880, offer 25. They opened at 18. There were some on our site that bought some of these. The whole point is that well, you could see it now. If it opened at 876 and these were 18, and now it's 865 and they're 19, that's exactly what I'm talking about. They widen the spreads on the opening. You throw in a low ball bid. And a low ball bid is if it's down 10, you look for things like 20 points away and put them even lower. You have an amazing edge that way, an amazing edge. I'm just telling you, that's what I see, an absolutely amazing edge. And you see it now. The stock opened at 876. As you see, these calls, we were watching them open at 1880. The stock now is 14 points lower, and the calls are higher. That's what I mean about people panicking. Now, another way to do it, you might say, why'd you pick the thousands? Because I'm looking at the open interest. These are updated at midnight. So the ones that have the biggest open interest are going to see the most panic. I've just seen it 1,000,000 times. So this had the most. So that's why we were concentrating on that one. I find it fascinating. The stock's down an extra 13 points and the calls are higher than what the low of where they open. So I just want to show you that. Now, there are a number of other ones you could do like this. Number one, when this rallied to 908, right in that area, do you try to buy, let's say, the 700 puts? Well, same thing. when it went up that fast, it's not like the opening. So it's not going to act like the opening did, where they really widened them. See on how they're only 80 cents wide? When on the opening, they might be $4 wide. This is just about playing the opening only. On the other hand, look at this. You want to talk about premium decay. The stock's on its low and the puts have hardly gone up. So I'm just telling you, if when it was 905, sure, you could throw in a low ball bid. But I'm talking about more on the opening. So if something opens down and you're betting on it reverting, it's going to be a lot more odds in your favor to play the opening, not later in the day. By then, the spreads have tightened. So we saw it in Domino's yesterday. So here's Domino's. So we see it's 530. So how many of you bought those? I hope we talked about, well, we were in them yesterday. And, talking about pressure, you have to throw in your, I post the entry. So what happened? The stock was 530 yesterday. We threw in to buy the 500 puts at 55 cents. They were bid 55, offered $2. The stock promptly sold off about $6. We threw in to sell them at $1.20. We took our double, more than a double. 3 lot, $195. Yeah, they went to 3 first. But the point was they opened so low, you just weren't going to lose a lot of money on them. So I'm telling you, you're right. You do it with Microsoft, you could do it with these. But the point is to put the puts or calls at such a price that even if it goes against you, you're not going to lose a lot of money. That's the beauty of this. I just can't stress that enough. And you'll get them in SMCI. You'll get them in Amazon. So number one, because what I'm seeing now, am I seeing unusual call or put activity? Well, I saw unusual call activity yesterday in the pot stock ETF, the MSOS. Yesterday, they were trading a ton of, well, look at the open interest. That's updated at midnight. Look at that open interest. So I wasn't in it. When the market fell apart and we had already taken a profit, I was out. But yeah, I mean, obviously you see it went nuts and it worked. So open interest, option volume precedes price. So if you see bull flags and big call volume, usually they know something. Now, let me just tell you, the bigger deal is not if it has a lot of call volume when it's already gone up. I see too many services that say that. Like, look at the call spike. You don't want the call spike when it's going up. You want to see a call spike when it's going down. So just keep that in mind in there. And also, you might ask, well, how do you know there were buys? Well, if the stock is doing this and there's huge call volume, well, maybe that's selling. Well, if the implied volatility is going up, though, that means it's more likely they're paying the offer, that the options are going up while the stock's going down. So just keep that in mind. That's another thing to watch in here. So very, very interesting, I think. So just, keep that in mind. So and just to in here. So the first thing is, like I said, I was out too early, but the option volume preceded price, no doubt. The other thing, and I'm telling you, it'll wear on you, but still you make money. All you care about is getting direction and try to grind it out. I never get the bottom or the top. Yeah, I got out too early in this, but we still made money. It's just not enough. So yeah, you could be really a pig about these things. So just keep that in mind. Another thing, if you buy a $2 stock like we did and we sold it 205, so we had a couple of thousand shares. you can either sell a little, but it went to $1.97. We were patting ourselves on the back. But if you start seeing some unusual call activity in other groups, stocks in that group, you can just go and throw in a low ball bid on calls. So you're taking your profit and you're buying a couple of calls with it. So that's another way to do it. So that's there are a number of ways to parlay into here. So, and as you see, it worked. But getting back to it about the markets, number one, you have a number of earnings coming out tonight. So let me copy and paste that in there and show you. Let me see if I have it. Yeah. Here you go. Let me put this in here for you. So here are the most important. I actually have permission from them to post these, which is cool. There. So you got all these coming out. Like I said, Amazon, AMD, all of these work the same way. If they open up, you'll try to lowball puts. If they open down, not with earnings. I'm talking about prior to earnings. Now, the reason that this works so well, the super micro, is because the spreads are wide and they panic on the opening. So now, what else are we doing? Well, if there weren't earnings, if there were no earnings, and there was no Fed, I'd be all over playing this. I'd be all over playing that the ES is getting overbought with a MACD at resistance. That's a great tell that they're going to crush the markets. But you have the Fed, you have all these earnings. So a lot of times you overanalyze this stuff. So you don't have to do a thing. We make enough money doing it before earnings and after earnings. So let's go into Amazon. Oh, and I'll give you another idea, Mitch, and this is why we were bearish on the opening. We were watching the Russell, and we were watching the Russell on the opening violate some levels. We're talking about the opening. So we were watching the Russell all the way back to where it was last Thursday. I mean, almost on the opening. So we're like, if it does that, then the NASDAQ is going to go to where it was last Thursday, which is here. It's not here. It's here. So for the NASDAQ to follow the Russell, you got to have the NASDAQ stocks get nailed, which is what's happening. But I'm telling you, if the Russell closes near its low, so I'll put them side by side. This is a big if then, but it's the way I'm looking at it. The Russell right now is on its low. So how about the NASDAQ? Well, theoretically, if the NASDAQ goes back to up here, let's say it rallies 50 points, but the Russell is down here, and the Russell on a daily chart looks like it's rolling over. How is the NASDAQ going to roll over? It's got to have the big NASDAQ stocks go down. So that's the theory. The theory is that if the Russell stays down, let's say we're 20 minutes to go, and the ES stays down, then to me, the probability is those NASDAQ stocks are going to have bad earnings. I'm not going to play them, but that's the theory. Now, in answer your question about Amazon, the stock's down on, $1.38. The spreads in there are real narrow. So you couldn't do that kind of panic trade on the opening. Now I'll show you. Yeah, there's another one. And we'll go over that. Thank you for pointing that out. So I'll show you. So here's the NASDAQ on the opening. How about Amazon on the opening? Well, that's not a good quote. So just take that off. Correct that bar. There. So here's Amazon on the opening. The problem with Amazon, the options have too tight a market. You can't play that panic trade. Can't play that panic trade. So even though Amazon opened here at 181.09, you're going to see the options weren't out of whack like you think they'd be. Look at the range. It's all of it $2, $1.90. They just weren't out of whack like you'd think they'd be. They have too tight of spreads. So I don't play the Amazons of the world. Now, what Mitch was saying, and I agree with you, I look at a lot of companion indexes. So let's go put them up using TradingView. So number one, I'm going to start with the Japan market. It's the least risky way to go on the downside. Overbought in a downtrend. This has not been the same since the government stopped buying their equity ETFs, which I pointed out up here on StockTwits, if you follow me on StockTwits and in our room. To me, one of the ways to play a downside is that way. But on what you're talking about, it's all about correlated indexes. So if you have the ES up here, so all the way up here, but if you have some of the indexes already down here, that's a big old warning sign. So let's go over it. There. I'm watching that 50. But I'm not watching the 50 like blindly shorting at the 50. I'm looking at that 50 in relation to a lot of other indexes. NASDAQ, way under the 50. A lot. I'm going to take off the drawings. And I'll take off the ATR trailing stop while we're at it. There. So the key to me is if this NASDAQ gets to here tonight, led by AMD, SMCI, and Amazon, then I don't know why the ES shouldn't be at the same spot, which is another 50 points. How about the Russell? Well, you already know that this better hold. How about what you mentioned, the transports? There. Oh, Mitch, that's a great point. So let's actually go and put them side by side. So there's your transports in relation to the 50. And on the right, I just put the NASDAQ index, not the futures. So all we're doing in here is looking at that. I think that's a great analogy on your part. Everything's overbought, especially the transports at resistance. The more points of contact, the more it's good resistance. So let me share this chart. So now we have the transports on the left, NASDAQ on the right. I'm going to put the ES on the left. And the NASDAQ on the right. So look at the distance between that and that. You see the gap. You see that this doesn't have much of one. That's why if this goes down to where the Russell is, I'll put it as IWM, same difference. There. So if you see that Russell near that candle, see that little reversal candle? That's like the S&P being at that reversal candle, which is like the NDX being right there. So you're right. I'm watching all of these correlated. How about the Dow? Yeah, well, that's already crapped out. So here's another one for you, Mitch. That twerk right there. So I'm going to go and put that here. That candle. In fact, I could probably put a 4-hour. There. So there's that candle on a 4-hour. So where would that put the NASDAQ on the right? There's your transports. Or we could do the Dow. There. So there's the Dow. And on the right, here's the NDX. And now you see this arrow. That's where they all are right now. They're all at that second sell-off. So you could call that the test to here. So I think you're right. If the Dow goes any lower or the Russell goes any lower, and Russell's staying above it. So if the Dow goes any lower, like violates that, And then you get the transports. Well, they've already violated it. So the more indexes that violate it, the more the probability the other indexes will violate it. And that brings you back to the Amazon. What the heck do you do in Amazon? Well, I still think we play it after the earnings, but you take the AMD, you take the SMCI, and how on earth do you play them? It's really difficult because maybe the NASDAQ holds everything up. Holds everything up. Maybe it does. All I know is a couple of things. Number one, the bond market still hasn't had a positive divergence. That's the bond market. So the Fed tomorrow becomes really important. If that breaks, the probability of the other equity indexes breaking goes up dramatically. There. Right there. So if this doesn't rally, I think it's a given that this goes down to this level. That's number one. So I'm not sure how much Amazon's going to matter. But getting back to it, if you want to know how to value where the expected move is and you don't have think or swim, just take the at the money straddle. And you'll see 745, 785. It's like 15 and a quarter. So even though up here it says 14.56, just take the at the money straddle. That's all you got to do. So the expected move is like 15.4. My problem with Amazon is that if the whole market might sell off, then this could go all the way back to this area. So you're talking about good news, it goes to 185. Bad news, it goes and tests 175. Well, the expected move is 15, so it's not bad. If I was going to play Amazon, though, it really depends on what the Russell and the transports are doing, so I'm not going to bet with earnings. If I was going to bet, I probably would just do it at the money, 10-point wide. But I'm telling you, without even looking, if a 10-point wide is more than $2, more than $1.50, I avoid it. Yeah, $1.68 isn't bad. Not great, not bad. The problem is that the NASDAQ and the ES look like they're rolling over. But that's not bad. Not great, not bad. So that's protecting you all the way to here, where it was with Meta's earnings. And if they're great, it protects you all the way to up here. So, we're going to look at that one. XLY is not a, there's 48%. Some of these indexes have a high concentration of Amazon. All I know is that if the Russell and the bonds stay down, it's more likely the NASDAQ's going to go down, which means the Amazons have to go down with it. That's the theory. So bonds on the low, why on earth would I buy the NASDAQ? That's the theory. So what I'm watching now for tomorrow, because I'm hoping this becomes a regular thing of me being on for like a half hour to say, what am I watching now? The first thing I'm watching, and definitely go and put some feedback if you like it. If you don't like it, don't put any feedback. So no, but this is what I'm looking at. So, and like I said, I can't look at a Head and Shoulders in Amazon into earnings. It's just really tough. I'd rather have this on what you're talking about, but then have a bear flag and a bear flag. Now I just don't want to play that kind of thing yet. But getting back to it, bonds, they need to rally. The bond stock market relationship is real. So if I go and take this and I take the S&P and I'll put a daily chart. Here's a daily chart of the S&P. Now keep in mind the MACD's overbought. This is usually an ideal sell signal. Well, if the bonds were diverging positively this is less likely to break down just because there are other places to put your money. And like I said, it's probability. So when this is doing this, but the ES is doing that, yeah, the bonds better rally. That's number one. So if you see the bond market with the Fed going to new lows, like down here, then the probability is this Russell and everything else is going to go down as well. So it's still like you'd have too many variables. So I'd rather just trade intraday tomorrow. Now, I do have an idea for you, a creative idea. So here's a creative idea for you. How about tomorrow? Let's say the market's open way down. Well, let's say the bonds do nothing. The overall markets do nothing. And you have something like a Qualcomm open way up that has earnings after the close. A lot of times these come back to unchanged because they don't want to be in for the Fed. So you can definitely use that to your advantage. So, I definitely hope this helps. Like I said, I'm still on at 3 like usual. And Chart Patterns Mastery, I promise I won't whine about missing like SNDL. We still made money. You're not going to get it perfect. So, and like I said, if I go to the doctor, they're going to throw money at you. So, and I have knee surgery on Friday, and I probably won't be here Monday. I want to be here Monday, but I might not be here, might be on medicine. But I'm just telling you, the more that I'm not here, like on a surgery day, the more likely they're going to throw money at you. So I hope you like that. In there. Papillon. Yeah, let me see if I could do that. I thought somebody asked me before and I seemed clueless on it. So let me see if I can do that for you. Posting as a CS. It's not a copy link, right? Or is it? And thanks, Mitch. Tell me if that's the right one. Now we'll see if it works. Let's see. There's that link. So that's for the futures. I called it list 1. So let me know if that works. So take care. I'll be back in the Chart Patterns Mastery room at 3. So I'll talk to you then.